Sweet. I gotta do something about this resolution next time around. Actually, I think I can change it. Yeah, I'll change it next time around. It's doing like 720. I don't want it to do 720. Good evening, folks that are here. Let me get this rocking on Telegram first, and then we'll get started. Trade review. Good. Keep that keep that one pinned in the top right. Actually, I'll do my own audio test right here. Mic check. Yeah, we're good. We're good. We're good. Let me test out the board though.
Use this time to hone your skills. You'll certainly need it.
That was fantastic. Honestly. All right, we're good. All right, let's get rolling. Let me move this over. And I muted myself on that one. Market prep. Going into the week. Nothing fancy. There's nothing really to say outside of let's get started once I open Spotify. This is like clockwork for me. So I like to have my music in the background. I like to just chill out. Let's crack it open. Spotify. So we're gonna review names. We're gonna look at some of last week, look at what's coming up this week, and fly through this and do it in under an hour. What should I listen to? I always have this playing in the background. I'll play something else this time. The Rock 2020 playlist. Oh, this is fire. Let's do it. I'd rather listen to this today. Let me just come back through Telegram real fast. I just want to hear how loud it is. I think we're good. All right. So last week there were a few different things that happened regarding the macro environment. I'm not really focused on that too much. Really, we're gonna talk about setups and everything else. The way I look at these pre-week streams is it's a great way to mentally get into the right frame of mind and to have a loose plan, kind of like I've already discussed before. If you go back and watch the older videos and older streams, even the streams from last week, you'll see a lot of that, like a lot of just mentally getting into shape, right? Anything that you want to do, anything that you want to accomplish in life, I'm sure you already know this from other areas in your own lives, is going to require some sacrifice. That sacrifice is time on Sunday evening going into the weekend, and the rest of that sacrifice is probably going to be the mental dexterity required in order to analyze these things. I've been trading for quite some time. I have a very solid track record as a trader, but also as someone who teaches people what it is that I do. I don't consider myself to be the absolute truth in trading, but what I do works for me. So hopefully it helps you as you are watching this or replaying this. If you're in this stream, understand that what you are seeing, getting ready to see, is something that you will not find from very many people, individuals. You might not find this anywhere else at all, actually. However, what I want you to take away from this is something of value, something I feel like you don't really see anywhere else, to be honest. I'm not here to talk trash about anybody else's style of doing anything, but I feel that most of the stuff is inconsequential. You'll hear noise and you'll hear what sounds like a good thing and you'll hear what sounds like something that you can utilize. But the reality is, most of the time, it is pure garbage. I'm not going to bring you that. I'm going to give you something that you can actually use. And if you didn't already know that about me, you most likely wouldn't be here. So let's get on with it. I'm going to start with the daily chart. We're going to start with SPY because I always use that. And look how many freaking annotations we have over here. Let's take a look at how last week replayed. Now, on Twitter, I didn't post the two trades that I took on Friday and Thursday. Thursday was a small win. Friday was pretty solid. But look at these pivots. I just want to have a couple moments to reflect. If you think that what I'm drawing in or doing does not have any kind of benefit, well, here you go. I love this. I love this because it shows that preparation does have some kind of value. And notice that I didn't try any predictions or anything like that. It was simply, me saying this is what I have seen happen in the past, and here's what I can see happening going forward, and here's what I'm going to do about it. We're going to do the same thing today. Something that I'm going to also do is add, as some of you kind of already know, for the majority, I say 99% of my trades, I post my trades in Telegram prior to taking these trades, right? So I'm not just talking about it and then coming back with some photoshopped, doctored wins. This is me saying I'm okay putting myself under the highest level of scrutiny because one, I've done this for a long time. I know what I'm doing, but also it gives you an insight into how a single day trader, myself, right, one particular person, goes about handling the ups and downs of the market and everything else. If you ever want to know, do I enjoy doing this? I enjoy teaching, but no, I don't want to be here right now. I don't want to be doing this. I say this in the Telegram all the time. I don't want to be here. That gives even more value to what it is that we're doing. Why? Because it's important. Okay. So that's the sacrifice that we're making. And when I'm posting throughout the day with my trades, my thought process is really, I'm confident in the trades that I'm taking, but also that confidence is well warranted because of the preparation and also the experience. So get a journal, document whatever. I don't mean a trade journal. There are zero trading journals that I co-sign. Not that there's anything wrong with them, but get a notebook, jot down things that work for you in the way that work for you. And also, if you hear someone in the background or that's my dog, and she's a puppy, and she does not respect personal boundaries, and she's a Doberman. So just letting you know, if for some reason we get knocked offline, it's her. All right. We're starting with SPY. One thing you can add to your list of tricks, if you want to call it that, is check out the economic calendar for the upcoming week. So, when the Fed is speaking, don't rely on, what's that dude's name? Walter Bloomberg, Zero Hedge, any of those guys. Don't rely on those guys that tell you what the hell's coming up for the upcoming week. It's ridiculous. It's nonsense, dude. Find a reliable source. Monday, December 9th, wholesale inventories at 10 a.m. That's the only thing you got coming up tomorrow. Wednesday, you got CPI. Great. And U.S. federal budget. All right, that's on Wednesday, the 11th. Thursday, the 12th, you got jobless claims, initial jobless claims, actually. Producer price index, core PPI. And then on Friday, you have import price and whatever, who cares? Tomorrow is largely, as far as I'm concerned, from a macro level, largely inconsequential. So we got that out of the way. We're clear. Daily chart. I'm not going to get rid of these pivots, but I'm going to hide them for the time being. This channel has continued for some time. You know what I think about that? Nothing, except for you might recall that I had this written up here. Overview, burden of proof, upside. I still believe that. Next mental pivot, 604.50. We got to change that. Consider, look left for ascending triangle pattern on a 65-minute chart. That is also still relevant. So, in other words, if we were talking about headwinds, I would say that the headwinds are pretty much the same. The conditions are the same as what we saw last week. Last week, we had one day where the market gapped up considerably. But then, besides that, it pretty much traded in a bit of this sideways pattern. So, I still think everything from last week is true. Now, everything down here, we can start to get rid of as far as I'm concerned. So, I'm going to get rid of that. So I'm going to remove this. I'm going to remove that. I'm going to remove that. Doesn't mean it might, not be relevant later, but we don't need it. Pretty much remove all of these. Great. Pullbacks are our way of minimizing risk. Great. We know that already. Remove that. Keep your charts as clear as possible. I'll leave that just in case. I think it's a reasonable area. All right. 65-minute chart. Now, the way I'm approaching this is let's go with the new all-time high. I'm just going to set this line there. Previous pivot, expecting activity. I'm going to leave that where it is. I'm going to leave that one here for now. I'll remove that. And actually, I will get rid of this for the time being. It's 604.96, but I'll find my own spots later. Volume. Week to date from last week, this is what the volume looked like. So this was an area where we had 2 days where price traded here. So no surprise there. And there was a lot of volume traded here at this spot. Not much to go on from a on a factual basis. We have an all-time high. Price eventually, after fading for the rest of the day, ended here. Okay, so that means everything in this area we should probably start paying attention to, like as much as possible. Actually, look how hidden that is. That's crazy. Remove this rectangle annotation. Great. We're going to make this the point of control for the week. I'm going to name it. Volume point of control for last week. I'm going to put that top left. Great. And we're going to lock it in place, actually. So it's there. Now we can have that make sure that's on all time frames. Okay, good. So we'll remember to look here regardless. We got the all-time high. We have a low pivot, if you want to call it that. That price visited a couple times, 605.91. I'm going to go ahead and just change that to a 605 flat, just as actually, you know what? I will not do that. I will remove the lock figure and let's find the correct spot for this. Now we'll lock it. And I don't like this color layout that we got going on here. Honestly, I'm going to start changing it. Whatever makes things most comfortable for you is the correct way of going about it, honestly. However, you're going to remember it. So this is a great framework to begin with. Now I'm going to go from the 65-minute chart to the 30-minute chart. I don't typically use the 30-minute chart, but I just want to get a closer view without going into the intraday numbers or intraday levels. All right. What I like about most of this, or what I like about this in particular, is that the story kind of tells itself in a nice way, right? Market gaps up, prices here. We can say that the volume, let's say there are orders that are sitting here and volume migrated here because this is where the money was, right? And so when it broke out, it barely broke out, but it also revisited this area and then it broke below it, but not for long enough because the money was still up here. And so it came back and then it did the same thing, right? So this is that motion you have going on. I'll just draw it. It's one of these. See what I'm doing here? It's just, I'm kind of showing you the ebbs and flows of how the money has been moving, but it's all centered here. That works out great for me. I love that because now I can kind of build around this idea that this is an anchor, right? And this is where I want to pay attention to if I have trouble deciding where I should put my focus. So next thing, we're going to go from 30-minute chart to 15-minute. I do use the 15-minute chart quite a bit. And mind you, this volume is only from last week. That's what this anchored volume profile is. All right. Next, I'm going to mark a couple areas that since price is here now, I want to mark a couple areas that I might want to pay attention to. The first one, and this probably makes the most sense actually. And if this is something that for you guys is already, you already understand this, we will get into something a little bit more complex here, or maybe something a little more detailed and nuanced in a second. So this is where we are currently, right? This is where price is. We don't know whether price is going to gap up or down, whatever, who cares? This is the high. That's it's $1.70 roughly away. So let's go ahead and mark a secondary pivot. And what I'm gonna do is I'm gonna take this one and mark it right there because it was the high from Thursday. Potential rejection area. If broken, look for the pivot above. Bam, right there. See how those two things work together? I'm gonna go ahead and take that. I'm gonna clone it and I'm gonna mark that. I want to avoid making this chart, or having too many lines on the chart, but both of these are valid, I think. So all I'm going to do is go to properties, extend right, lock the figure, bam. Same thing. Cool. You might be wondering, if this isn't telling me exactly how to trade this, why am I writing it down? Simple. Because intraday on a 5-minute chart and whatever else you're using in the middle of the day, you're going to look at this and say, well, damn, I'm so glad that I know what the hell is going on, right? I don't need to go and do all of this stuff right now when I should be watching the price action. That's what this is all about. Yesterday, I traded 4 times. I had 4 wins. Or not yesterday, last week. Week before, I traded 3 times, 3 wins. I don't know what kind of streak I was on prior to that because I stopped counting. That's usually how it goes. I don't usually keep track of stuff like that. But my point is, each day I looked to these lines and I used them in different ways. The truth is, I could take any of these lines and I could mark them as a straight white line. That's it. Just like a symbol for price action to say, hey, pay attention to this. I don't need markers. I don't need them to be color coded. All I need to know is it's an area of importance. The reason I have these things here is so that there's a little bit of context for you when you're watching this back, or if you're streaming this right now, you can kind of see where my head might be at with some of this stuff. But the reality is, you don't even need this. Anyway, we have this here. By the way, my color coded system is for aesthetics only. It has nothing to do with anything. It doesn't tell me to go short or go long. It is just a way to say, pay attention. And sometimes people associate red with short. And that's why I'm very careful about using these colors this way. I make sure to tell you that you shouldn't rely on them so heavily, but they may help you get a sense of how I feel about the price action as price reaches those areas. The orange, we can change the color of these. I mean, technically, I guess I should find another color for this at some point, but whatever. I love that color. Let's go with it. The name for that color is actually periwinkle. All right, random fact. So let's take 609.06. We could even say 610 as a mental pivot if you want to have a little bit more leeway with your chart. And now we're going to go from the 15-minute to identifying an area of support somewhere in here because we don't have one yet. So I'm going to go with the potential bounce areas. Actually, I like this one better for that. So what I'm going to do is get rid of this yellow line, remove it, place it here because this is an area where we saw support multiple times. When I'm trying to decide between the lows of this and the lows of this area, I'm always going to go with the lowest point. Okay. The lowest possible point. I could put it right here, but yeah, it starts to negate that one. Actually, let's skip that and let's put it here. I need to find one that has some confluence with the prices from this day. That's all I'm trying to do here. There we go. I like it. 607. We'll call it 607. 607 flat. And let's extend right. Lock the figure. See where it says only visible. And yeah, we want to put this on all time frames. Now we'll lock the figure. Bam. There we go. Now that I've done that, I want to change the color of these. We'll bring these back to like a, yeah, we'll use sky blue. or something along those lines. Doesn't really mean much, but I like it better this way. All right. This is what we have to work with. Price has been trading this way. This is all we have to really go on. We know that these are the extreme lows. This is the extreme high. There was a bit of a pattern of activity here where when price would reach what was the new all-time high, it would either trade sideways or it would break down, right? Let's look at three instances of that happening, or more than three, actually. One, that's one time that happened. Here's a second time that it happened. Here's another time that it happened. Here's another one, even though it gapped up after. Here's another time that it happened, traded sideways, had a little bit of trouble there. And here's another time that it happened. So every time there's been a new high, the market has retraced it. And if you were to use a strategy such as going long on a pre-market high, like here, for instance, as long as you had a little patience, you were rewarded for taking that risk or that gamble. However, it was not immediate in most cases, and a lot of the market has retraced each time. So it hasn't been just a straight shot up. And that is why, if you were to go out to this daily chart, you will continue to see this very strange leaning upward price action. Next mental pivot on our overview or our biggest chart, I'm going to say 610. There it is. So this is still relevant, and we're going to go back. And now we've got a little bit to work with. And one thing I just realized is I need to go ahead and make these available on all time frames. Now let's zoom out a little bit again and just have a look. There we go. So we got some decent pivots. There's no real gaps here. If price were to break down further and start to trade in this range, I mean, this is the only part where I'm maybe missing something, though I don't feel compelled to put anything here, honestly. But I will go ahead and do it anyway. Extend right, and let's also make sure that it's available in all time frames. I'm sure there's an equivalent on Trading View if you use that, or if you use, some other charting application besides this one. Okay, we're pretty good. We have a lot to work with now. From here, let's talk about a couple different scenarios. As you might already know, I try not to undercut what other people might find important, but I'll say that I don't typically use patterns very much, and I don't use anything other than the price action. What I mean by that is the way price actually moves when the market is open. That's what I use more than anything else. I trust that more than everything else. When I see how candles move, and I don't mean the shape or the formation of the candle, I couldn't care less about any of that. What I mean is how price moves right here. See that? When you see this moving on the side and the actual tickers, the actual price itself, that is pretty much what I use as my source of truth. Nothing else. But if you do use something else, it's probably important that you realize when you see price moving a certain way that you make little notes throughout the day. So I've also given my space to do that. Additionally, there were some trades that I took last week that I didn't post on X.com. We'll talk about the one from Friday, which I don't even remember, but I'll go back and look at it real fast. I'll probably post about it tomorrow, but I'm pretty sure whatever it was, it used. I'll go to Telegram so I can figure this out because I actually don't remember. I think I traded short briefly. Week to date, yes, that's what it was. Okay, so intraday, I'm pretty sure I said something along the lines of when the party is lame, you leave. It's just a cool little analogy that I like to have. And that was because market gapped up, or it didn't gap up actually. I mean, technically did, but it broke out early in the day, right? And then it traded this way. I watched the price action around here in real time, and that allowed me to trade short. And I think at some point I traded, maybe it was here, because there's a setup that I've created myself, which utilizes this here to trade short into this gap. And that was the end of my trade. I think it was 25% win. Don't focus on percentages, they don't matter. But at the end of the day, it pretty much held true. The market used this as a bit of a magnet. Now, if I were to say, hey, here's a takeaway from that for you as a person, as a trader who wants to know how you can utilize these levels, we're going to do the same thing. Let's talk two scenarios. Let's talk the long scenario. So market breaks out. Now, I know 100 different trade setups, literally, and on versusthemarket.com, you will see a lot of that here very soon in the future. But if the market gaps up, Okay, for your notes, because if you're taking notes here, if the market gaps up, I'm going to be reluctant to trade to the upside. Why is that? Because we've already seen that when the market makes a move in a particular direction, it doesn't blast off from that move, right? We have not seen that. What we have seen is the market retrace those moves and or trade sideways prior to committing or continuing that direction. So I would like to think of that as the market, already taking a lot of that move away from you, aka your potential upside. That's how I would treat this, honestly. If the market breaks out instead, just like I did on Friday, I'm gonna be looking at ways to potentially undercut that. I don't mean just go shorting things because it's at its all-time high or because it's near the highs, because that is a excuse me, a bad habit that a lot of traders have. What I'm referring to is simply paying attention to whether or not the market shows you or gives you anything to work with, such as reaching the high but not quite breaking through the high, or maybe reaching the pre-market high but failing to actually trade above the pre-market high. Or maybe there's a pre-market high that's hit and it breaks through it, but then it completely wipes away all of those gains. Things like that are opportunities to observe and make another decision. So, that's why I think these lines will become important, or these areas rather than lines, right? So imagine every line I draw has one of these, something like that, right? They are ranges more than they are single lines or single prices. So if the market breaks out, my thought process is I'm going to discount that move and think about what could happen on the opposite side of that. Mostly because of, I mean, just zoom out and look left again. I feel like I need to make a t-shirt that says zoom out, look left. Copyright versus the market and Stocks Pilgrim. Don't you dare try to make a t-shirt without me. I know some of you guys are already thinking about it. Don't do it. Could someone remind me of that? Like seriously, someone in Telegram or on Twitter or whatever, or X.com. Sorry, Elon. Remind me, we need to make a zoom out, look left shirt. I'm dead serious. This is not a joke. Thank you. If you don't remind me, I'm going to play this video back eventually when I'm editing it, and I'm going to think, holy shit, no one reminded me. That's terrible. Much appreciated. So we know the plan if the market breaks out. If it does, I'm not looking to trade to the upside unless I see something in real time, which is why I can't really give you very much to go on outside of this. If you want to know my credentials, or I guess you could say track record, ask around, ask in the chat right now, or anyone following me. I'm probably the person that shorts bull flags more than anybody else on this planet. And I win 90+% of the time. This is just one of those examples, right? This is a bullish setup in quotes, but I know why these don't work out. We don't have time to get into that. If you want to learn more about that, you'll have to either join our community and site or just, I don't know, figure it out for yourself. That's it. That's the upside plan for now. Just for now. If the market gaps down, let's talk about it. Market gaps down and say it starts to trade in this range, somewhere within here, right? My process or my thought is, hey, we've seen this as an area of support in the past. We've seen the market bounce from here. Let me start to find a way intraday that I can identify an area for a bounce and measure my risk or my potential for it to break down further. What I mean by that is if I want to trade the bounce, right? I want the market to go to the upside because it has broken down somewhere like this. Let's straighten this out. I don't like when it's like this. There we go. So let's say the market gaps down. It's trading down around here, right? And it's doing one of these. Okay. And this is the area where I want to buy calls, right? Intraday. I know what my risk is, right? I know that once it breaks into this area, I got some tough decisions to make. Yeah. And because there is also this area where the market did trade a considerable amount of volume here, and I know that this could potentially be the next magnet, and this is also where my long trade could potentially go wrong. Bad, all bad. But if I decide to buy calls somewhere in this range, and this is where I decide the market, is going to bounce, or that's where I'm putting my risk and my, my trade risk, then this is a pretty solid setup because I have a couple areas I've identified where the market has bounced in the past and also where it has traded here in the past and also where it gapped through in the past. This is a great area. So not only that, as a potential low pivot, what I'm going to do now is I'm going to clone this. I'm going to take this. I'm going to draw that right here actually. So instead of this red line, I'm going to just place this here. Do you see the significance of that or why this matters? Because it's setting the narrative based on probability, not just possibility. Because possibility says it could break out from here, or it could bounce from here, or it could break down from here. I'm not saying either or. I'm saying that it is more probable that if the market were to gap down here, barring any unforeseen circumstances, we have seen mostly bullish activity from this spot. Therefore, it is more probable, which means 51% or more, there's a greater chance of it bouncing from here given recent price action. Now, that is, I mean, there are potential flaws in that logic if we are just debating semantics. But when we're talking about market activity, given recent history as an intraday trader, that is the most probable thing. So that's my thought process here. Once again, I don't want to trade anything to the upside if it does not. Let's not clone this. I don't want to trade anything to the upside if I don't get an opportunity like this. As far as in trading to the downside, this is dangerous as hell. So I would highly recommend don't end up in one of those situations where you're trying to short the top and the market decides it goes to, infinity. Because then your calls are absolutely cooked. And you know what? That's going to be your fault. Okay. But let's say the market gaps up and it's trading somewhere in this range, right? So let's say it gaps up, it's here, and it's doesn't quite reach the all-time high, or maybe it flirts with the all-time high just a little bit. Something along those lines, right? Somewhere within here. Get it along those lines. That's hilarious. This is the only time I'd consider potentially trading short. And do you know why that is? Let's go ahead and color these lines. I think I just created something new. I like this. See, what I'm getting at here is the fact that when the market undercuts a move, I'm looking to take the opposite side. So if the market, takes away all of my potential to trade to the upside, well, now I'm looking to trade to the downside because the market is moving in cycles in a way, right? So that's how this works. That's always been my philosophy and my thought process, and it has worked very well for me over the years. Okay. And I have a very long track record where you can verify for yourself if you want to see if I'm full of it or not. Okay. So that's SPY. That's it. That's my approach to a name like SPY. There's no real setup to go with, right? There are no patterns that I'm really relying on. Even when we do identify patterns, let's say intraday, I'm very careful and I use them as maybe a third unit of measurement here because the first one is price action. The second one is, or would be, pivots and mental pivots. And the third might be patterns or situational awareness, supply and demand, accompanied with support and resistance, whatever. So now let's go to some of the other names in the market. We got our list here. I know this says versus the watch list. This is pretty much just what I'm looking at. It's a recurring or living watch list that I update over time. Whatever the top setups are, if you guys have any ideas, and thanks, Dr. P. I see that zoom out, look left. That'll serve as a great reminder. Um, we'll, yeah, that's a great reminder for me. But still, actually, like tag me in it if you can, so that I get it as a notification later. All right. So let's create our little list here. The way I analyze this stuff will be maybe a little bit different than the other names. I'm not going to look at the Qs. I'm not going to look at SMH for the semiconductors. Let's go straight to Tesla. Incredible, right? And I did get my alerts. My alerts did set. They triggered, right? Inverse head and shoulders. It broke out from that. Fantastic. I'm a charting genius. Great. But now we got to deal with something else, right? Which is this happened in the pre-market session, this initial move up in this breakout, if I'm not mistaken. So was it, or this right at the open? Either way, you wouldn't have had much time to analyze. You would have had to have purchased and held and gambled and hoped the market went up. right? So I wouldn't even rely on that. And if I could contribute to my idea that technical analysis is BS, I would say I got a couple instances here where every charting book you ever had, including the great charting and technical analysis by Fred McAllen, which again, I have no problem with that book whatsoever. That book would tell you to go short here based on this. I'm just saying. That's all I'm saying. And you would also have a contradiction because right after or right before that pattern, you had just a textbook bull flag. Rarely does it work out like this. So if you're somebody that's sitting at home and you're wondering, hey, well, why isn't it as simple as what this book made it sound out, make it sound like it should be? Well, it's because they're writing a book and they want you to, buy it. Okay. So it's always going to be simpler when you read a book because they're authors, not traders. That's not a shot fired unless they want it to be. All right. Tesla, this setup is very simple, right? It's the fact that we're at all-time highs, and from here, all you got to do is go in and start to identify some pivots to the downside. Besides that, you're not going to find anything because we are, adjusted for split or split adjusted. It is an all-time high, technically. Okay, split adjusted all-time high. You can't do very much with that. Once again, falling wedge breakout. I'm a charting genius. Every time I say that, I'm being facetious. Let's go to MicroStrategy because last week we did have someone mention that this name, should see a breakout because of Bitcoin. And I had mentioned that that's a great analysis, like that's a great way to see the correlation between two names, right? When it comes to sympathy names, that's a great observation. But I also mentioned that sometimes those breakouts, even if they should happen on paper, they do take a little bit longer. I think this is one of those cases where it's taken a bit longer. So just something to take away from this. We even still have the breakout marker here, and it did gap up through that and fell right through it. As far as I'm concerned, this level is still one to watch. In fact, we could probably move that level down a little bit, which is exactly what I'm going to do. Edit the alert. I'm going to get rid of this one actually. And I'm going to remove the ray annotation because I forgot that's how they do it on this site. And I'm going to go ahead and mark one here. Oof, that's awful. I would not go long above this spot that I had here. I'm not going to set an alert because it's not my type of trade. I don't need to do that anymore. But I think this is one of those areas where I would pay attention to. This is where it gapped through. And I think this is where we'll see some resistance, for lack of a better phrase. There we go. Fantastic. I'm going to keep it here because this whole, Bitcoin thing is relatively intriguing to me. Matter of fact, let's go back real fast. I just want to see something. Yeah, anybody doing technical analysis on a daily chart like this, you're asking for trouble, dude. Charts, patterns, charts don't break out because of a pattern that was formed. I promise you, I promise you, I promise you, every single time I would be willing to stake everything I have ever owned on this. If money could be made because you looked at a pattern, let's think about that for a second. Something as simple as identifying patterns, like this is something a third grader could do. You know it, I know it, even if I'm the only person willing to say it out loud. No one is making life-changing money because of something a third grader could do. Otherwise, third graders would drop out right now and go straight to making big money. Think about it. You did not just strike gold and find the only profession where that doesn't require much of you before it and allows you to make money other people can't. That's ridiculous. Anybody who believes in that probably still believes in Santa Claus, probably still believes in scratching off lottery tickets, and also probably took their, a loan out or, mortgaged their home and went to Vegas. All bad ideas, promise you. So there is a positive, silver lining here, which is because there is so much nuance and because people do still think like that, there is an opening where if we take a little bit of that and the truth that people don't want to hear and we examine it a little bit closer and we're willing to do a little bit more work and we're willing to be up for a little bit longer on Sunday and we're willing to miss a little bit of the game and we're willing to, take a little bit of our time each day, well, we can be a little bit better than everybody else. And guess what? That's all it takes to be a winner as a trader. So we have or I have these levels drawn here. I don't see any anything as a pattern that I'm really interested in, I will pay attention to whether or not the market cracks these levels. As a matter of fact, I will mark this one and I will set an alert here. 450 or 453, you could even say as a mental pivot if you wanted to. Touch, And this thing triggers a lot when price is, traveling around here. So there you go. I have an alert set. There you go. That's it. Coin. This one's a little bit more interesting. Now, this one did break out through this level. It came back and it has touched this area again. I'm going to leave that level there, but I'm also going to take this one and I'm going to, it's visible on all time frames, which is fantastic. Let's go ahead and move that right here. Or is this the higher spot? What's the price here? 349.75. This one is 347.97. Okay, so we have a new one. So I got a new high point, a new pivot. And this one, simply put, I'm just going to put an alert there. Super easy. Create an alert at this line. Touch. Fantastic. And let's go ahead and ask what a pensive Engelbart is. Actually, let's not ask that. 10 days pass, 10 times. Let's say 5 days just for the rest of the week. There you go. So I've got that marked. If that does see a breakout of some sort and reaches that area, okay, then, maybe then it's time to play ball. For me, I highly doubt it, but if you want to draw some patterns because they make you feel comfortable, let's go ahead and do that. Clone, there you go. If you see anybody draw this and they say that the market has broken out because there was a symmetrical triangle, I want you to unfollow them immediately because they don't know anything. However, I will say that this is price, compressing and trading in a tightening range. And if it broke out, fantastic. But I could also say that it's due for a retest of this upper trend line. You might remember that from last week. So I'm going to leave these here just because they're interesting to look at. And we'll come back to it, if the market sees that price triggered. At this point, the stream is or has been on for a little while. This is where we're going to take a break and chat with some of our sponsors. This is brought to you by Versus the Market, the company that I created and I founded and own, and I'm the CEO and the president. And this commercial, this marketing didn't cost me anything, so I'm enjoying it. Let's take 30 seconds so I can drink some water and you guys can go yell at your kids or whatever and tell them to go to bed because it's past their bedtime. And we're back. Costco. The price action last week was a little strange, I seem to recall. But also, I've noticed the liquidity up here has been quite trash. Look at that. It's almost like it's gotten worse. I do not like this name. I will not be paying attention to this name at all. As a matter of fact, I'm going to likely remove it. I just want you to remember how much hype was surrounding this, and this breakout has been weak, very terrible since all of FinTwit kind of, got onto this. What are we calling FinTwit now, by the way? Is it FinX now? That sounds like garbage. I like FinTwit better. SMCI, same thing. Nope. It's time to ask my patented system, TradeOS, to tell us what names we should be looking at because I don't feel like scouring the market or looking for setups. Don't worry, it'll do this in like 2 seconds. Well, what do you know? We've already got some. Fantastic. Now, when people say something is hanging out at, I'm not putting anybody on blast here. So if you end up watching this, if you're the person I'm talking about, this isn't directed at you, dude. But simply put, a volume shelf on a weekly chart just means that the market traded there the whole time. That's it. That's it. Volume shelves only show you what's been trading in one spot. So if this is where the market has been hanging out, right? This doesn't mean anything's going to happen here. It just means this is how much you're measuring. But if I were to pull this back some, right? As a matter of fact, we don't even need to do that. We could do this. Let's go year to date, apply. And we got to go out to the daily chart probably to see that. Year to date, right? This isn't even the most significant spot for the entire year. But if I were to take this and drag this over to here, Well, we've been trading here for a while. This is where the candles have sat. So this doesn't mean anything. This doesn't mean that we're expecting a breakout or a breakdown. It just means this is where the market has spent the most time relative to the amount of time we are measuring. That is how this works. If I move this over some, now we're measuring just these candles, right? And so this is where the most volume is traded. If I move this over to here, say from this bounce spot, this area, this is where the volume traded the most in that area. And you could argue that because this is where it's traded the most, the market is more likely to go to the downside and revisit this because it couldn't find any or couldn't find enough liquidity up here. Look at that. This is where situational awareness and using context matters as a trader. I'm just saying, I'm using a completely different name to illustrate this point with NVIDIA. Okay. Now let's review some of the names that TradeOS apparently thinks I should pay attention to. NVIDIA is one of them. Well, what do you know? Okay. Well, I'm already one step ahead of you, computer. TradeOS is a system that I built that is, I don't even want to talk about it right now. Okay. Now, let's use a little bit of what we're going to call common sense. Market trades sideways, right? Support, resistance, new high. Nice job. Support a little bit higher, resistance even higher, high. Get shut down. Support, similar area, resistance, but not as high as it once was on either of these spots. Interesting. So let's just analyze the support here, right? There's three times. One, two, three. And not even 3 days. It's more than 3 days. But let's say there's three different areas here. And we can tell that these three areas were actual support because underneath that there's a gap. And this gap here means nothing traded here or very little traded here by comparison. Okay. So this area I'm going to pay attention to as a potential, you know, what we're going to call it support for now. I don't like that term, but we're going to say that. And we're going to also put one of these bounce annotations here, whichever was lowest. There we go. And I'm going to extend right, and I'm going to make sure that we can see this on all time frames. Fantastic. So that's a 131. All right. Now I'm going to go into the 65-minute chart. And I'm going to get rid of any trend lines, any patterns, any inverse head and shoulder lines that I used intraday. I'm going to get them out of the way. Great. Now all I want to do is make sure that I can understand what my purpose here, what's my goal. As an intraday trader, I'm going to pay attention to intraday pivots. Okay. Now, let's say I like patterns. Fantastic. Let's say patterns are great. Smooth. Sweet. Clone, clone, clone. Ladies and gentlemen, that is known as that is a head and shoulders pattern. That head and shoulders pattern is a bearish pattern. Let's say because of this, the market broke down. Great. That's the end of it. Where can we find support? Because that don't look like it. But even if it did, I'm going to use month to date volume. Okay. And I'm going to say, well, look at that. What do you know? Price traded here for a little while, and that's the tallest volume shelf here. And the same thing can be said for this one. And then we have this one here. On an intraday setup, I like the chances of price either trading back and forth between these two or from here to here for many reasons. We don't even need to get into the options market side of things, but this is something I'm going to pay attention to. I need to go ahead and draw a couple of different markers before I start casting any kind of opinions on what might happen. Bounce spot. I'm going to put one here at 140.29, maybe even 140 flat. I like 140 flat better, even if I miss out on the trade itself. Extend right. And I'm going to do one more thing, which is I'm going to make sure this is visible on all time frames. Great. And I'm going to set an alert here. If the market starts trading down here, I think then we can start talking about a potential bounce or a breakdown. Depends on what the price action looks like. But this is where I'm going to set the alert for. Instead of breakout, we're going to put breakdown. 5 days. Trigger 10 times. That's when the alert expires. Touch. Bam. Sweet. There you go. And I'm going to move NVIDIA up the list for myself. You like it? I love it. As far as a breakout, the breakout would have to clear this area for me, honestly. I don't like any of this. And because of that, I'm not really going to pay much attention to it. That's just the honest to God's truth. Next, Google. It might be time to audit TradeOS and ask where the hell it's getting these names from. Because that pattern is nothing like this one. But I understand why it did it. Bull flag. Easy. Okay. So even if there's a bull flag here intraday, there's two spots to clear, right? There's the high of that day itself, and then there's the one nearby. Here and here. Sweet. Of course, there are some over here, but I would probably end up calling that more like a target than anything else, and not target like where you shop when you only need one thing and then you come back with like a bunch of things. I don't mean like that kind of target. Nobody's ever gone to Target and bought one item. If you tell me you have, I know you're a liar. You're definitely lying. It's not possible. I tried it. And you see how this is a pivot here? There's two schools of thought. There's this one and then there's this one. This is the actual pivot or that's the pivot that's nearby and then this is the one that you actually need to clear. I don't really believe in either of them, but I would say I'd feel a lot more comfortable knowing I covered my bases here as opposed to here because this was an area of, I mean, this was a rejection, right? And look how far the market fell right after that. That's just using common sense in trading, as far as I'm concerned. Like, use your eyes. All time frames. Bam, there you go. Love it. So I'll probably set an alert at both these lines, honestly. Extend right. Yeah, let's do it. Why not? Extend right. Let's make sure we can see this on all time frames. And I will set an alert here, and I'll set an alert at the other one as well, because I might be able to get away with trading from here to here if I see that activity continue. But yeah, let's do it. I'm gonna set an alert here just to pay attention, and I'll set one here maybe where I will actually trade it if, yeah, I'm gonna put this as Google, pay attention. Mhm. 10 days, 10 times, now 5 days for each of them. And I wish I had made an adjustment to this because I kind of don't. Don't worry about it. It's fine. Let's make another one. Same thing. Touch. 10 days pass. Trigger 10 times. I'm okay with the 10 days. There we go. So I've got two alerts set here, and I'm also, we'll come back to it. I know this says Google, but we're going to go with just this chart itself. NVIDIA. Yes, those two names are different if you didn't know that. Okay, what's next? Let's see. You know what I haven't done in a long time is I haven't created a scanner that you guys could like copy. I don't think I really want to, but I feel like I should look at Amazon. I haven't looked at Amazon in a long time. I see it down here on my chart, but this is traded in a textbook fashion. I don't mean textbook by pattern standards. I just mean that it's just very neat. There hasn't been any retracing. It's just, trade it to the upsides, continue to trade that way. And I would like to get a little bit more insight into this. You guys might remember there was one time where I made a quote unquote prediction over the summer. And I said, Amazon's going to be the name we look for this year. That was in 2021. Let's go back and see what happened in 2021 if you guys don't remember. Damn, I've been doing this for a long time. Let's see. This is 2020, 2021, summer 2021. Okay, we got June here. What happened in the summer? April, May, June. Yep, we saw a price go from 159. This is before there was a split, but relatively speaking, price went from here to here. That was pretty damn good, and it continued. It did it a couple times actually. Not bad, not bad. That was our trade of the summer. I remember that now. Let's try this though. Back to the daily chart. What do we got? This is as nice of a chart as you can get. This is a nice little bullish chart going on. I think it's time to start adding a couple quote unquote swing names to the list. Day to date chart, and let's go into 65 minutes. Since we don't have any pivots here, we can set a mental pivot. Honestly, as far as I'm concerned, it doesn't really make that much of a difference. We're going to have to analyze the price action overall. What I'm going to do is I'm going to make sure that Amazon becomes one of the names that I start paying a little bit more attention to. This is built on the idea of the fundamentals more than anything else, to be honest. I don't want to really want to get into it, but there's been no sign of it slowing down. And then when we talk about the fundamentals or from an investing standpoint, I like Amazon overall. I'll come back to it and we'll talk about, maybe how you can utilize that intraday, but nothing beats the price action itself. And even then, the pullbacks are the opportunities that you might buy to the upside. And you're going to have to manage your trades if you want to get anything out of it in the short term or in the interim. But from a long term or with a long term view, and I mean like over the next few months, I could see this, continuing. So kind of the same thing I did with SPY when I said, hey, look, I think SPY is going to crack 500 and continue. It went up to 600. I didn't sell until it got to like 590, I think. That ended up being my biggest trade of the year. And that wasn't really an intraday trade. That was me actually purchasing SPY, and holding on to it from like 485, I think it was, or 450 actually, somewhere in there. So we'll keep Amazon here on watch. I'm not going into the analysis of it because I don't think it matters until intraday shows up anyway. If you want to mark some spots for support, sure, let's knock ourselves out. This is where the volume has traded. Let's move this to, let's say, last week to date. What all I'm going to do here, right, is I'm going to think about last week. This is where it traded the most. So what I'm going to do is I'm going to take this bounce area and I'm going to say anything underneath that, I think is going to have a hard time because the market gapped straight through it. Nothing traded here. So what pivot can we find around here? I think it's both of these. And this is the one I'm going to pay attention to. 224.34, bottom right, extend right. In Telegram, I will add a little bit more emphasis and analysis to these things. And then throughout the week in Telegram, I will, talk about these things in real time as they're happening. And most likely, I will be around at market open, maybe to trade this intraday, maybe to start a swing. We'll see how it goes though. All time frames, bam, there you go. I like that, and I'll also keep an eye on that one there as well. Create an alert, touch. There it is. So you have, I would not trade this short. So I just want to get that out the way now. What else do we have on this list already? I'm gonna get rid of SMCI. Basically anything that I want to keep this list relatively short actually. Etsy, I just don't like the liquidity for myself. It might work for someone else, for me, not necessarily. Snow. Ugh. See, when it trades sideways like this and it does more of the same, even though it has this rounded top here, I don't like this. I got a few ideas about this, but I think this one has to go as well. Yeah, I think it's got to go. Only reason I'm keeping Apple here is because it's a part of the larger market. But to be honest, I don't trade Apple. Let's see what Apple's doing right now anyway, just relative to everything else. Gross, I hate it. Stay away. Oh, look at that. Meta falling wedge. A lot of times, names like this, when it does this, you end up seeing the market break out in pre-market. And then, if you chase it and you hit a wall, then you're like, oh, damn, why did I do that? But I have nothing to say about this really, except for I will set an alert to pay attention to, whether or not the market gives you an opportunity to trade this as a bounce. But we'll move this near the top of the list because that's textbook. It doesn't get any simpler than that, honestly. What is it trading at right now? 623. Okay. Hmm. There, you've been promoted up the list. Fantastic. What else we got? Microsoft. I don't like trading Microsoft, honestly. I also don't like Microsoft's involvement in the AI industry right now, to be honest. AMD, this looks hellish. If there was a phrase I was going to use, and AMD is also like very prone to swings in volatility, so we're going to stay away from that for the time being. There was a swing name that I had in the past that I didn't talk about too much, and TradeOS seems to think I should pay attention to it. So let's go here real fast and see what we got. Now, I think I sold Square somewhere in, I don't know, it was, wait, you could see these lines, right? So you guys can understand when I was talking about wherever you see the initial line at, you'll know that's when I first mentioned this as a swing. This was November of 2023. Now it's had some ups and downs here. Like, that's, I got no problem with that. But I also mentioned it again somewhere in here, and I don't remember where. It was definitely, I think it was might have been here actually. It was definitely when it was cold out. I do remember that much. As cold as you can say LA is. And look at it now. Fantastic. But I sold it somewhere, not at the peak. I don't remember where. But anyway, this was purely based off of fundamental factors. But from a setup standpoint, I also kind of like this a bit more than many people would give it credit for, given the fact that they don't understand what this company's application is because they compare it all the time to PayPal and they're not similar at all. That said, let's go date to date and then 65-minute chart. And then I will just put a marker here for a potential swing and I will pay attention to it when it gets somewhere in this range because 100 is the actual area I think we need to pay attention to. So I just want a little bit of a heads up. Trigger 10 times, 10 days past. There we go. So we'll add Square up the list. So we got Spy, Q, SMH. I honestly want to remove these. Like, I understand we have traditionally had those there because they are ETFs, but I'm going to start putting these towards the bottom with the rest of these. Let's make sure Square moves up the list here. There you go. We are solid. I don't think I have any other names in mind, to be honest. And you really want to go into it with a clear head and focus. So the overall plan is number one, as usual, intraday SPY is like what I trade like clockwork. I pretty much do that with my eyes closed. Amazon, I like its potential to continue, but only if it bounces. I don't want to trade it uh, from all-time highs. I'd like to see an opportunity to, you know, cut some of that risk or minimize that risk. Meta, this one, feel like I set an alert here? Regardless, let's make sure we actually do that. So this is it's a falling wedge, or you can say it's a bull flag, technically, on depending on what time frame you look at. But this is great. I'm not going to go into the smaller time frames. I'm going to find a mental pivot nearest to it. I think I did set one of these actually. I remember now, but at 620. But let's just go ahead and set another one. Why not? Whose car alarm is going off outside Los Angeles? 1010. Bam. There you go. So now we got the clear there. Amazon, Meta, Square. That's already set. Fantastic. Nvidia, I set an alert for the bounce. Same thing. Easy. Google, even though I don't like the setup for the breakout. Fantastic. Tesla, couldn't really care. I, I have my thoughts and feelings about Tesla, but it's extremely volatile at times. I'm going to stay away from it. So there we go. SPY, Amazon, Meta, Square, Nvidia, Google, the rest of these, take them or leave them. And I think that pretty much seals the deal for us. I think we're good. I'm prepared. Any questions? Any comments? I'm not gonna lie, my music has been fire, and I might have to start feeding this into the stream on all platforms on each stream. For those that want to, I have not forgotten you guys have messaged me in the DMs. We just didn't get, I didn't get through all of them to join the community. But what I need to tell you is that there's something more important on the way. As I had mentioned to you guys in the past, I said the biggest issue that traders face is not knowing where to go from where they are right now, because most of you don't need to start over. Most people feel like they have amassed a multitude of trading euphemisms and a bunch of knowledge, and most people know where they need to, or they know they need to gain something to add to their current skill set. I totally understand that. I respect that. However, I know how to take you from where you are to where you want to go. And that's what you should be paying attention to. No, I'm not releasing it on Twitter. No, I'm not doing it for free. Let's just get that out of the way. I'm not one of these guys that's like, yeah, I'm gonna give you some free information. Join. No, 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 no. What I do, what I do is worth money, buddy. Okay. If you don't like it, too bad. That's how I'm always gonna be, and I'm never gonna bullshit you. Period. But yeah, it works, and it's genius. So, um, you'll hear more about that pretty soon. The people that are in the community, yeah, you'll get access to it first. You already know how that goes. And everybody else, well, you're going to have to join. If you're already on the wait list for Versus the Market, you don't need to sign up for anything else. You don't need to DM me, please. It'd be helpful if you guys just turn the notifications on for Twitter or X.com so that when it is available, you know about it. That's the smartest thing you can do right now, I promise you. Besides that, I'm hungry. I'm ready to go cook steak, so I have to go. Okay. I tried to do the stream a bit earlier than the other ones so that you guys who have, other responsibilities or, obviously on the East Coast or wherever you are in the world, you could join in live. The streams are recorded. I'm uploading them to the vault. People that are in the community have had access to the vault temporarily, but for everybody else, if you do join, you will have access to some of these recordings, these videos. I think they give you a nice view into how you should frame and set up your trades. And not only that, some of the market mentality that you should carry with you. So I'm making sure every single time I stream, they are recorded, they are shortened. So an hour and a half stream is going to be a 45-minute video. And you can search through all of the videos in the vault through keywords. That is a huge part of what we're doing, shortening the amount of time it requires to learn what it is that you need to learn and know exactly what you need to learn from a trusted source to go exactly where you need to go, rather than scouring and gathering and stacking information, because everyone knows that does not work. I'm all about solutions. I hope you guys have a fantastic trading week. Remember to wear your jacket. If you're someone who is in a cold area, a cold region, make sure you dress warm and zip your jacket up all the way before I tell your mother. Because she doesn't play that. Thanks for tuning in, and I will chat with you guys later. Trade smart. Peace.